Broadcasting live and direct from your speakers. It's About Your Money. Allow me to suggest a few ground rules before embarking on this experience. Be open-minded to new ideas that may seem counterintuitive. Be willing to suspend your disbelief, because the worst form of ignorance is when we judge or reject something we know little or nothing about. Are you ready? Let's get started.
Are you ready to transform your financial mindset?
Welcome to About Your Money.
Hosted by financial marketing strategist
Michael Andrews Jr.
About Your Money brings you straight, no-nonsense talk about all things money, connecting you with accessible resources and industry-proven experts in the areas of banking and credit, loans and modifications, fair debt and collection practices, retirement planning and investing, real estate, and more. If it's about your money, we'll talk about it. Host Michael Andrews Jr. will provide the tools individuals, families, and communities need right now for economic empowerment. Take charge of your financial future right now
with About Your Money.
And now, here's your host and financial strategist,
Michael Andrews Jr.
Welcome to today's show. Today is August 30th, show 156, and you're listening to About Your Money Radio. I'm your host, Michael, and I'm thankful that you're tuning in today. And if you caught the recorded version, you downloaded it, hey, thank you so much for downloading the show or listening to the show. And you can find us here every Wednesday, 2 p.m. Pacific time. And we have some great information. In fact, today is the last day of August. And as we get into September is Life Insurance Awareness Month. And last week, I started a mini series, if you will, on the myths versus the facts concerning life insurance. And, you know, if you pay attention to anything financial, whether it be online, television, radio, whatever, you'll notice that there's a lot of financial noise out there. Some people say do this, some people say do that. And what's interesting is that many people just don't take in consideration that it all depends. It always depends. It depends upon your specific situation. Okay. So I'm going to be going over again, or continuing on, I should say, with some of the myths that's out there and giving you the facts so that you can have the right information concerning life insurance. Now, as my announcer said at the very beginning of the broadcast, the worst form of ignorance is when we judge or reject something we know little or nothing about. So if you have an ideology about life insurance and you're firm on that, you're resolute in that, I'm going to just say this. Are you willing to suspend your disbelief for just a moment to hear something that might change your life? Have you experienced life so much that you're unwilling to suspend your belief for a moment to hear an opposing view? Now, that's directed to someone or those of you who are just, rock solid on your beliefs and you don't want to hear anything else. Yeah, we get it. You're unwilling to learn. You're not trainable. You're not coachable. You're not teachable, right? But for many of you, the vast percentage of you who are listening, you are teachable, coachable, and you're trainable. And so that's why you're listening. And I'm grateful for that. So what I'm going to do, in fact, you can always go to our website at aboutyourmoneyradio.com, aboutyourmoneyradio.com, and you'll find some links there that will just lead you to some solutions and strategies and information to help you. You'll also notice our sponsors page. So take note of that. You'll see, of course, our top sponsor there on the very top there. You'll see Lamar Baxter. He's the branch manager of All Western Mortgage. I encourage you to give him a call because they have some amazing programs. If you're renting right now, then chances are you're able to acquire a piece of property. Even if you think that your credit is a certain way, you may think you're not qualified right now. I would say give him a call. It doesn't cost you anything to give him a call and find out what options you might have. If you're in a home, see what's available in with respect to some type of cash out or maybe, another real estate acquisition to increase your portfolio. Just thinking outside the box here, folks. In addition to that, you'll see our good friend Cecil Williams, the realtor there with Coldwell Banker. Take a look. His information is there as well on our page. So I encourage you to take a look at them, as I mentioned just a moment ago. Okay. So like I said earlier, you're listening to show 156, and I'm going to just touch on some of the myths here. And I'm not going to be long at all. I want to provide you with some quick information to empower you and give you information that you can use for your family and or business, and share it with a loved one as well. Okay. So now let's get started. Now, I received a couple emails as well from last week's show. And if you always want to just communicate with us, you can do so from our website at aboutyourmoneyradio.com. You have two choices there. You can type out your message or click a button and you can actually record your voice message there. We get it all on our webpage. It's pretty amazing technology. It's real simple to use as well. Or you can send it to info@aboutyourmoneyradio.com. That's info@aboutyourmoneyradio.com. So when I get back from this super fast break to acknowledge our sponsors, I'm going to share with you a few other myths concerning life insurance, and I'm going to give you the facts as well. So I hope you have your pen and your notepad to take some copious notes, okay? We'll be right back with more of About Your Money.
Seeking to purchase a home or refinance your existing home mortgage and require down payment and or closing cost assistance? Contact Lamar Baxter with All Western Mortgage to inquire about their down payment and closing cost assistance program that could save you thousands of dollars relative to your down payment and closing costs. Remember, their programs are for both home purchase mortgage and refinance mortgage loans. Contact Lamar Baxter at 800-682-7906, 800-682-7906, or lbaxter at allwestern.com. lbaxter@allwestern.com. All Western Mortgage, an equal housing lender. NMLS 1502753, licensed by the Department of Business Oversight under the California Residential Mortgage Lending Act.
To hear real solutions to real problems many are facing in America, tune in live to About Your Money Radio with Michael Andrews. The truth has been known to offend. Learn more at aboutyourmoneyradio.com.
Educating, empowering,
Engaging.
about your money with financial strategist
Michael Andrews Jr.
helping you navigate your life towards financial transformation. And now, back to the show.
Welcome back to About Your Money. If you're listening, just now tuning in, you're listening to About Your Money Radio, show 156, today, August 30th, on a glorious hot day here in Sacramento, California. That's where we're broadcasting from. And we're glad that you're in tune with us. If you download the show, maybe it's not August 30th any longer. Well, thank you in advance for listening to us. We're going to be talking today about continuing our talk from last week on a mini series that we created called The Myth versus the Facts concerning life insurance. Now, September is Life Insurance Awareness Month, and it is our goal, our quest to give you the facts to make informed decisions that will benefit not just you and your family, but your business partners as well. And you will be amazed at the things in which are out there. So let's get started. Now, one of the emails I got, I did receive an email. And for you grammarians, I did say email I got. I did say that. And I said it on purpose because I have a number of grammarians that love to listen to the show and give their helpful advice and input and opinions. And I appreciate all of them. But anyway, and we have some new listeners during this show as well. So I want to thank you for tuning in for the first time. Now, an email I received was very interesting. And I'll just say it. I'll just give you a quick blurb about it. But they said, Michael, all insurance companies are the same. And I told them to expound on that. And they really didn't do it. They just said, well, they're all the same. And that's not true. All life insurance carriers are not the same. Everyone's different. Now, you may have, let's say, for an example, insurance carrier 1, 2, and 3, each offering, let's say, term insurance. Okay, as an example. Well, in itself, that may seem like they're all the same, but the reality is they're all different. Each of them have individualized mortality costs, meaning that they determine the price per thousand based upon your health, based on, maybe prescriptions, maybe even your driving record, believe it or not. Yeah, I'll touch a little bit about that. They'll even deal with some insurance companies, and only a few in the United States deal with the living benefits aspect of it, where they'll advance you, or I should say, provide for you an acceleration of the death benefit to you while you're alive. And if you had a heart attack or a stroke or got diagnosed with cancer, there's no additional cost for that. And many carriers don't do that. So you can't say they're all the same. Everyone's different. Just like every car is different. It's a car is a car is a car. But they're all uniquely different. A Cadillac has maybe a certain amount of mileage versus a different car. You see my point there, okay? So I don't want to belabor the point. You get it. So the myth is all insurance carriers are the same. When in fact, they're not, okay? Every insurance carrier, I'm dealing with one insurance carrier right now with a client. And the client had called us and said, I want this particular company because my mother had them. And I said, okay, that's great. But let's look at your specific situation. And it turns out, based on this person's specific health history, that carrier would not be ideal for them because the cost of insurance will be higher. And they have stricter guidelines concerning underwriting versus a different carrier who's been along a long time. They've been around a long, long time, and they're offering her a specific type of insurance for a little bit less money, and she's getting a better deal, and their underwriting is a little bit more liberal. And so it took her a long time to understand that because she was so fixated on having the same insurance company that her mom had. You know what I mean? So we have to let go of certain ideals or ideologies because of what our family did, because it may be different based on our current situation today, our specific situation. I always tell people, it always depends when they ask a financial question. It depends. It depends upon your age. It depends upon your history, your medical history. It depends upon what your financial objective is. It depends upon a lot of factors. So it's really kind of hard to give a general statement. And I find that people who give these one-size-fits-all strategies, they're speaking to a demographic that honestly won't really investigate and won't really do their homework concerning what's best for them. They just kind of toe the line. Okay, well, so-and-so said I should do that, and that's it. They're not thinking. So I need for you to think, okay, ladies and gentlemen? So you want to do that, even considering the things in which I'm telling you today. Another myth is someone that said, in fact, we had a person who said this, and they said, well, I'm single. My kids are grown. I don't need any coverage. I'm not trying to leave money to my grown kids. In fact, as one person said, I don't even like my kids. I said, okay, I get it. So basically you feel you have no need for life insurance because your children are grown and you don't want to leave them any money. And they said, even if I didn't have any kids, I wouldn't need life insurance. I'm single. I don't have any family that I want to leave money to. I don't need the coverage. And so that myth, you have to ask yourself, well, do they really need any life insurance? So if this is you, my question is, what do you believe in? What cause do you believe in? What cause do you support? What groups? Do you belong to a church or synagogue? I'm going to ask you some questions like that. Why? Because you may want to leave that organization or organizations' monies in your absence. You may want to, bequeath some money to them, to a church or synagogue or a nonprofit organization. Because with life insurance, you can do that. You can allocate a percentage to not just one group, but various groups. So if you have 10 different causes you support, then you can give each one 10%. That's 100% of the total death benefit. That's one way of looking at it. If you're saying, well, still, I don't believe in a cause. I'm not supporting any group. I don't need life insurance. I go, well, my question will be then, well, based on the new type of life insurance that's been around for 20 years. When I say new type, it's been for 20 years. People often have not heard of it. And so it's new to them. So I say new type. And so it's not misleading. It's factual to them. Now, my question then becomes, well, who takes care of you if something happens to you and you don't die and you need medical attention? You need a nurse, perhaps to come into your home. You need some home care. You need a nurse to come visit you to, whatever the case may be, to help you around the home. You need help. You need help getting in and out of bed. You need help going to the bathroom, things of that nature. How do you pay for that? Because the way life insurance today, if it's properly structured, a life insurance company will release a percentage of the death benefit to you should you have a critical or chronic illness. Okay. Most people or most life insurance agents will say, well, we have living benefits too, but then they're only referring to terminal illness. You have to be terminally ill and with a life expectancy of usually 12 months or less. And then you can get percentages of your death benefit. Not so any longer with certain carriers that we deal with. Heart attack, stroke, cancer, major organ transplant, things of that nature, chronic illness where you cannot perform 2 out of the 6 activities of daily living, like feeding yourself, bathing, dressing, things of that nature, continence. You have issues going on where you need help, like I said earlier, getting in and out of bed. So those are some of the things in which you may want to consider life insurance when you think you may not need it, because life insurance has changed. So think about that. Okay. Now, someone also said, and I addressed this on the show last week, and I got a couple emails about this. Well, asking, do you recommend getting life insurance on your kids? And my resounding answer to that is yes. Now, I know some of our listeners may disagree with getting life insurance on your children. Oh my God, what is the purpose? Why would you do that? They don't have any assets, as you might be thinking. They don't have any assets. What's the point of giving them life insurance? Oh, well, today I'm giving you some basic information. I won't go into too much depth. However, I will say this. When it comes, when I'm thinking about children, I have clients. In fact, there are a number of individuals, families across this country that the moment their child or a child is born, whether it be their child or a grandchild, they get insurance on that child for their future. For their future. And I'm not talking about some baby food life insurance plan. I'm talking about something that's going to accumulate monies and give them access to monies on a non-tax basis. And it's absolutely amazing. At the very basic, what I'll do is provide you with one reason as to why you will want to consider getting life insurance on your children, especially if they're under the age of 10 or even 8 or 9. Now, and I should have a separate series on life insurance versus the 529 plan for college savings. Now, I have a lot of my colleagues who they encourage their clients to get a 529 plan. But every time when the clients see the difference or the comparison to that with permanent life insurance, they're like, oh, wait a minute, I will want that. Well, the contribution limits with the 529 plan versus life insurance is quite different. It favors life insurance. You can actually have, flexibility when it comes to the funds in which are being invested. For an example, you have a predetermined fund or portfolio in a 529 plan. Whatever that 529 plan is going to do, that's just going to do. And that's it. Okay. You have pretty much, you're limited in your say so on that versus a permanent life insurance option where nowadays you have various indexes with which you can choose. You have a gold index. You have the S&P, you have the Dow Jones Real Estate, and you can actually allocate a percentage based on those three as an example. And so I have some people, they're going, 50% in the gold and they're switching up, then they're allocating the other 50 into the S&P and the Dow Jones, things of that nature. There's so many different ways in which you can do this. And this basically helps you when you have a higher learning or higher knowledge of life insurance planning. When you get someone that says, oh, no, just do this, that tells me a whole lot. And it should tell you a whole lot about what that person or persons know or do not know as it relates to the tax law concerning life insurance. Usually when I find that people spew a one-size-fits-all strategy when it comes to life insurance, it really tells me the lack of knowledge that they have concerning the tax law and the current life insurance strategies available today. Life insurance has changed dramatically, folks, over the last 20, 30 years. It really has. Just like your cell phone has changed over the last 35 years. If you follow us on Facebook or any other social media, you'll see that on our Facebook page, facebook.com/about your money, you'll notice I put a picture of a 15 megabyte hard drive that was costing, I think, nearly $2,500 over 30 years ago. Compare that to the 128 gigabyte flash drive you can get for a little over $11 today. See, technology has changed, folks, and we have to understand that life insurance has changed as well dramatically. So I just need you to know that, okay? Now, that's just one aspect of the flexibility when it comes to investments and risk as it relates to a 529 plan versus life insurance. When it comes to the financial aid impact, most people who feel that they should just get a 529 plan instead of life insurance, well, they soon realize, and it's too late when they realize it, that the 529 plan, when it comes to the calculations, the money you have in that has to be accounted for when the children, they're filling out the forms for the children for maybe some type of grants or whatever. You have to include what's in your 529 plan. You have to include what's in your checking account. You have to include what's in your IRA and any other investments that you may have. But you do not have to disclose what's in your life insurance accumulation. And as a result of that, you will have perhaps a better, grant when it comes to having life insurance. Okay. Also, I'll say this, and I'm going to close with this one part of the example, that when it comes to utilizing life insurance as a college planning vehicle, well, there are no restrictions with respect to that child using the money to go to an international university versus a 529 plan, which the plan funds could only be withdrawn without a penalty for use at accredited colleges by the U.S. Department of Education. So you can take the money out to use it for an international university, but you're going to be penalized for that. But what if your child doesn't want to go to college? Yeah, you're kind of stuck there with a 529 plan. Well, someone can go to school, of course, but with the permanent life insurance option, if it's done properly, that child would now have access to cash without a penalty, without taxation, if it's done properly, and the amount of money that has accumulated by the time they say they're in the early 20s, you think they might have opportunity to have a significant down payment or be able to acquire property? Yes, they would. And that separates, you got to understand, this little planning I'm just mentioning right here is the one thing that separates the haves versus the have-nots. Really. When you think about it, let's just be real here. I'm going to be absolutely transparent with you. That's the difference between many people in the black community versus those who are not. That one part right there. When you see little Johnny having access to a couple $100,000 and they have options, right, for maybe a business venture or et cetera, when they're in their 20s now, it's oftentimes it relates to because how monies were set aside and accumulated when they were a youth, when they were an infant, and so on. We just don't know. You're told to put your money in a baby food plan. And by the time that child gets to be 18, the child has about $1,200. I've seen it. Now, I'm just giving you some small examples here. I'm not saying that's that way across the board, but you get my point. It's time to wake up. Okay. So I kind of spent a lot of time on that, and maybe I shouldn't have done that, but I'm glad I did. So that's another myth when it comes to life insurance. I just gave you the facts. Now, with respect, another myth is that you should always purchase the return of premium rider on any term policy. I hear these agents who they're not thinking. I hear a lot of agents, many agents anyway, that kind of have a certain belief. You got, get a return of premium. So when the term is over with, you get your money back. Is that always ideal? Because there's a cost for that return of premium rider, or the ROP rider. There's a cost for that. So you need to talk to the agent and say, okay, what's the cost of that rider? What's the cost of having that on an annual basis? And then you multiply that over the course of the term. There's your total cost. Now, the question is, does that cost make sense versus you taking that extra cost and putting it elsewhere and getting some type of return? Will it be more beneficial for you to do that way? Sometimes yes. And so you need to look at all the options rather than follow the crowd. What's the point of following the crowd? Okay. Now, I oftentimes, people say, well, Michael, you talk about tax law as it relates to life insurance. How does a tax law fit into life insurance? I go, well, quite a bit. Most often, more than 95% of the time, most often, life insurance death benefit proceeds are non-taxed. And you have to ask yourself, why is that? Well, it's because the IRS allows it under Internal Revenue Code 101. Now, IRC 101 just simply states that, traditionally, life insurance death benefit proceeds are not taxed. There's a caveat though, and it depends, but usually most people don't have an estate in the millions of dollars. And if that's the case, then based on a specific situation, it can lead to some tax, but that's not the case majority of the time. When it's done properly, a plan is done properly, that particular family or person will know what situation they're in, and they'll know how to properly structure that life insurance. Should it be in the form of a trust? Should the trust own it? Things of that nature. So there's so many different aspects of life insurance. Now, when it comes to permanent life insurance, and we're talking about cash accumulation, yes, the IRS has a lot of say-so in that as well. And I find that those who are against permanent life insurance, typically 99.99% of the time, they have no clue or understanding of the tax laws that govern how a permanent life insurance should be structured in the first place. And when you have that knowledge, then you're able to give, people like you who are listening the right information based on your specific situation all the way around. Okay. So that's one thing you have to understand too. Now, when it comes to, and I already touched this on, so I don't know why this came up as an email I should read, but we touched on it earlier on last week's broadcast. I should always buy term and invest the difference. And that's not necessarily true at all. That's a one size fits all strategy that's been conveyed down the ages for the last more than 30 years. And things have changed dramatically. Different types of life insurance is available based on, and based on your situation, it will determine what you should do. Should you always get term? A lot of our clients have term and permanent. Why would they do that? Well, it's based on their specific situation. And for time's sake, I won't get into all of that, but I will tell you it has a lot to do with the living benefits aspect of things. And I'll just say this, with a permanent insurance product, typically when it's structured for retirement purposes, then although legally it is life insurance, but the way they're structuring it is for the cash accumulation. And there have been some people saying, well, when I die, I don't get my cash accumulation at all. My family only gets the death benefit. And I go, that's not true. I don't know who's telling you this stuff, but it's not true. And as it relates to permanent insurance, another myth is, as it relates to permanent insurance, a myth is that it's guaranteed to run out. And what happens is I've seen this over and over again. When you see someone telling you that, it's guaranteed to run out. The life insurance contract says it's going to run out. And I get these overly anxious, unwilling to learn anything agents, unwilling to learn the truth agents out there who are spewing this misinformation, and they don't understand what they're reading. While, for an example, on a permanent life insurance product, I'll use an index universal life product. If you ever hear that it's guaranteed to always run out, well, you have to understand the life insurance carrier provides a number of examples, and legally they have to show a guarantee column. That guarantee column is a representation of what it's guaranteed to do should our economic market become negative every year since the policy became enforced, every year for at least 20 years. And as a result of that, it shows the policy lapsing. Hey, look, if you have the S&P doing negative results for 20 years, everything is going to lapse. I mean, the banking system is going to lapse. Everything's going to lapse for the most part. And we have other issues that we need to be concerned about. And so I need to let you see and have an understanding that that's what that guarantee is. And I've had one agent says, well, it doesn't say that. I go, well, call the insurance company. They'll tell it to you. Well, I'm not going to call them. I said, well, then you don't want to be taught. You just want to read, but you don't want to know what's behind everything. And so I want to just let you know that as well. So keep this in mind, folks, because I'm going to be wrapping up here in just a moment. When you consider life insurance, understand two words. It depends. The type of life insurance that you should get depends upon your specific situation. Always. Always. Because I had a neighbor who said, I want to get insurance, the kind that you have. I go, okay. You want what I have? I think my health condition is a little bit different than yours. I thought I saw you walking around with a oxygen tank. They go, yeah. Well, I'll tell you right now, the cost base might be a little different than mine because I don't need that medical device on my nostrils 24/7 like you do. He's like, oh. I said, yeah, it's always dependent upon your health, your past health condition, your current health condition, and so on and so on. But let's find out what we can do for you. And the cost base was a little bit higher than they wanted to pay. They go, man, that's high. And I go, I'll tell you what, why don't you get some quotes? I could run 4 or 5 different quotes, 4 or 5 different companies. And I urge you and I challenge you to do the same thing with 4 or 5 other life insurance agents. And you get back with me and tell me what they're telling you. And he actually did 3 other agents. And he goes, wow, Michael, I'm being told it's kind of like in the same ballpark, but yours is different because you have this living benefit program. I go, no, these insurance companies has it. He goes, how come these other ones don't? I go, I don't know. I can't answer that question for you, sir, but you have to determine what's best for you based on your situation, based on all of the quotes you have here. Well, I recommend getting the one that we have right here. And so, you want to deal with an insurance advisor who's able to bring to you information from numerous resources, not just one company or 2 companies, but several resources to give you the best and effective cost for you. Okay. So I just want to just convey that all the way around. I have so many other myths that I want to dispel and give you the facts on, but because of time, your time, I want to be mindful of that. And we're going to continue on next week's show. Okay. I encourage you to visit our website, aboutyourmoneyradio.com. That's aboutyourmoneyradio.com. You can also send me an email, info@aboutyourmoneyradio.com, info@aboutyourmoneyradio.com, or just simply go to our website and click on the contact page there and let us know what your question is or questions. And if you have an opinion or a comment or a suggestion, I'm open to hear it. I want to hear your point of view as it relates to life insurance, what you believe, because right now we have a lot of people who are thinking GoFundMe is a darn life insurance plan. You kidding me? Begging is not the way to build a legacy. It just doesn't work that way. I've seen so many people go to GoFundMe. I'm not knocking GoFundMe as a platform. It's an excellent platform for crowdfunding, but it's not an excellent platform when it comes to planning for life insurance. When in fact, you should spend a few dollars and you'll have potentially access to hundreds of thousands of dollars, if not $1 million or more. And you can save yourself a headache. You save yourself grief and worry and just so much when it comes to just planning ahead. Okay, so there's so much more. Remember the quote that our announcer gave at the very beginning. The worst form of ignorance is when we judge or reject something we know little or nothing about. I'm just saying. Yeah, I'm passionate about this because I see so many misinformed people getting the wrong information continually, and some are actually refusing to get the right one because they're doing something that their mom did or dad did. Well, my dad just told me to do this here, and dad was wrong. Because dad gave you information based on what he was told when he was much younger, 30, 40 years ago or 50 years ago. Things have changed, and we urge you to change with it, okay? So if you want to reach me directly, you can always do so. My direct line, 916-238-8282, 916-238-8282. 82. This is Michael Andrews. I look forward to coming to you again next week with more facts to defeat the myths that are out there when it comes to life insurance. In fact, September is Life Insurance Awareness Month. Get it before you need to have it, okay? Take care. God bless all of you. Bye for now.
Thank you for listening to About Your Money. Hosted by financial marketing strategist
Michael Andrews Jr.
Got questions? Need more details about a guest or a topic you heard on the show? Contact Michael right now at aboutyourmoneyradio.com. And be sure to follow us on social media at About Your Money on Facebook and Twitter for updates, financial tips, and current financial news and commentary from Michael throughout the week. About Your Money, empowering you with knowledge to create the financial freedom you deserve.